Liberation Day is here, and Trump's reciprocal tariffs will soon be announced too. With all eyes on this, investors and traders are anticipating how the markets will react, which sectors will be hit the most, and most importantly, what you should consider for your trading strategy on Liberation Day. Watch this video to know what market experts have to say. Firstly, how will the US markets perform after these tariffs take effect? It's important to note that other countries already trade with low tariffs between themselves. So the question is, will these new tariffs really help the US economy or just cause global market disruption? This is what Anup Vadvan, the former Commerce Secretary, had to say about this.
As part of the bilateral trade agreement, there's an opportunity to, grow trade, and these negotiations happen on a very systematic, technical basis. Each side has what in trade parlance is called certain ambitions or certain wants from the other country, and then each side has certain sensitivities. So the Americans will convey to us what they want from us. We'll examine that list. We'll identify things we can do easily. We'll identify things which we are sensitive on. And then typically, in trade parlance, there are various sort of safeguards you can put in place to protect your sensitivities. One safeguard is, staging of duty. So your duty does not come down to zero. It comes to a moderate level, or it comes down slowly over a number of years. Then you have instruments like a tariff rate quota, where the quantities are restricted. Let us say you open up to American agricultural products or dairy products, you limit the quantity so that there is no, surge of imports into India. So all these mechanisms are there. So ultimately, you balance your ambition and sensitivities in this manner and come out with a trade agreement that is mutually, beneficial and to the satisfaction of both sides. I'm sure that will happen. The other aspect of, floodgate of opportunity is that indiscriminate, tariff barriers going on year after year, decade after decade is not a recommended, economic or trade policy. So it's an opportunity for us to rationalize our tariffs.
So does this mean that these tariffs will have an adverse impact on these countries and global markets? Well, this is Jayant Krishna, Senior Fellow at CSIS's take on it.
Let's look at, the US-India trade, which is of the order of about $200 billion. I think both President Trump and Prime Minister Modi, they issued a joint statement some time back, and they talked about it going to 500 billion by the year 2030. So my feeling is nothing radical will happen in a few hours from now. It could perhaps be a 10% tariff, which is an impact which India could cope with and could recover through other opportunities. But more than that will be difficult. But more on the tariff side, I mean, some of the things which have been hurting the US, and they've been talking about it, tom-tomming about it quite a lot, is about apples, which have 50% duty in India, import duty, corn, which has 50%, coffee, which has 100%, raisins, walnuts, almonds, which has 100%, whiskey, which has about 150%, flowers has 60%. So I think these are the kind of things, French fries, drug formulations, potatoes, canned peaches. I think these are the areas which they have talked about, and some change India could affect in that, but not very radical.
While we're speaking of the impact on these tariffs, Radhika Rao, Senior Economist and Executive Director, DBS Bank, sheds light on the sectors that are most likely to be hit and what India's strategy should be to tackle this.
In fact, if you see the nature of trade, it's quite non-agricultural product heavy, and where the tariffs are lower than the agricultural product. So the tariff rate, if you just take it at the tariff rate level, of course, the non-agricultural is 1/3 of agricultural in terms of just the tariff rate. But if you see the volume or the value of trade that we have with the US, it is more non-agricultural heavy. Again, agricultural is something that, if India needs to bridge that gap, because now India enjoys a trade surplus, but it wants to make it a bit more balanced. Where can they step up? I think they've already spoken about energy, already spoken about defense equipment. Agriculture is another aspect. And again, I'll bring China in here because if you remember 2019, President Trump's first term, at that time, there was this attempt to better balance the trade between the two countries. And a lot of the discussion was around soya beans and how China could step up those purchases. So again, I think something will get visited for India as well. So overall, I would think this would be my sector breakup of where, which is still quite non-agricultural heavy, at least in terms of the sectors that are important or have sufficient share in overall export.
Lastly, the question on everyone's mind is how much tariff will be announced? Mark Matthews, Head Research Asia, Julius Baer, shares his prediction with us.
Yes, so I think that the market will rally. I think that the actual impact of this on the consumer is much less than people realize, because the consumer is 70% of the US economy, but imported consumer goods only affect 4% of consumption expenditure. And so it looks like there's a lot of stuff on Walmart shelves, but they actually don't add up to be a huge part of the monthly budget. The monthly budget is dominated by housing, transportation, healthcare, insurance. The other thing I would just say is that you would think intuitively if, let's say, the price of a pair of Nike shoes is $100 and they slap a 20% tariff on it, then the new price is $120. But it's not, because the tariff is only applied on the actual price of the goods of the shoes. And I can tell you, in the instance of Nike shoes, only 20% of the price of the shoes is the shoe itself, the plastic, the cloth, the shoelaces, etc. 80% is advertising, distribution, that kind of thing. So yeah, I don't think it'll be a big hit on the consumer. It'll be a bigger hit on the manufacturer, because about 60% of manufactured goods in America are imported intermediate goods, like plastics and integrated circuits and steel, that kind of thing. So, but manufacturing is a much smaller part of US GDP, if memory serves me right, 15%, something like that. So yeah, I don't think it'll be as big of a deal as it is expected to be.
These are the 5 things you must watch out for as Trump announces reciprocal tariffs tonight and for the market opening tomorrow. Stay tuned to NDTV Profit for more.